All right, good morning, everyone. Let's see what Bitcoin has been up to. But first things first, it's a big shout out to everyone who's followed this week. So we got Masood, shout out Potter, shout out DS Perkin, shout out Shade Trade in the building, and also shout out Guy Droud. I'm horrible at pronouncing these names, but appreciate the support. Welcome to the family, and yeah, I hope you find the content useful. Let's take a look at where we are as far as the price action goes. So last thing we were talking about on Discord, um, we were talking. This is yesterday. This is yesterday's stream. We said clearly that we have this PO3 that's taken place on Sunday. Following that PO3, we've had a bit of a bear chain, so successive lower lows and lower highs. And then we have a bit more of an impulse as soon as we broke into our range. As soon as we reclaimed that range, we kind of tried to retest it, and then we had this flush down, didn't we? We had this flush down, leaving us a nice last supply zone. Yeah. And then we had this really aggressive bear bars, so bear black long bars, creating fair value gaps as we go. So whenever you have an aggressive move, okay, most conventional traders, I would say beginner traders or inexperienced traders, when they see a big move, they think, oh, there's a big move taking place now. It's time to get in. It's time to get in. Let's get in. No, that's actually the time to sit back and relax and watch and potentially wait for a reversal. Why? Because of this thing called inefficient price action. Whenever you have a massive impulse, what price does, it creates inefficient price action, leaving these fair value gaps. As you can see a gap between this bar here and that bar here. That's what's known as a fair value gap. Now, usually fair value gaps will get filled. All right. So ultimately, that's kind of what we see here, where we have this flush, we have this tiny little range, and then we start to see them get filled. Okay. So now we obviously had this flush down, and we said, we had this retracement, and price tried to flush it down again and break structure here, but it couldn't. Now, because it couldn't do that, it created a weak high here. This became a weak high. So subsequently, price rotated to target that high. All right. Also, we got a nice second entry here. If you look at a lower time frame, maybe the 5 minute or the 10 minute, you will see a decent change in market structure here, which told you price is really and truly about to reverse up. Okay. Now, as price reversed up, we were looking at this level to see whether we're going to get a reaction. Did we get a reaction? No, we didn't. We did not get a change in market structure. Instead, we got a flurry of bull bars. However, we did get this deceitful bar that tried to trick us. It tried to tell us that there is a wick of this high. Now, if there's a wick of this high, obviously then this level becomes a weak level. So we look to rotate down. However, the subsequent bars, traded higher, and it actually was not, an SFP of that level. So what we did is we broke structure bullishly. As we broke structure bullishly, we can see that we covered a majority of this fair value gap that we talked about. Okay. And then we talked at this point yesterday, we said, well, we're looking for some sort of retracement because what happens after a range or a break in structure, 9 times out of 10, you're going to get a retracement. Price needs to breathe. It's like swimming, right? When you swim, you do your strokes, you go 1, 2, 3, 4, 5, 6. All right. What do you do after? You come up for some air. Then you go back in. 1, 2, 3, 4, 5, 6. You come up for some air, you go back in. So that's kind of what a retracement is like. It's price breathing before it continues further up. All right. That's a decent analogy to think about. Now, really and truly, in terms of trading, retracement is just a way of price creating or collecting fuel from late longs or late shorts. Okay, simply collecting those late entries into the play and sweeping their stops and using that for the fuel, the orders to carry on. All right. So we were saying that this last supply is a potential reaction point. All right, it's a potential reaction point. Now the thing is, if we were continuing this downward trend, so lower low, lower high, lower low, lower high, lower low, for another lower high, for a lower low, Yeah, that is feasible. Why is that feasible? Because we've got reason to come down further. Okay, this is the bear scenario. Remember what I said yesterday? We're always going to look at the bull and the bear scenario to create this narrative. We've got reason to come down lower. We've got a few zones below us. We've got 45-minute zones, all right, as well as our range zones below us. Okay, as well as the fact that the target for the PO3 is still a little bit further down. Okay, remember the PO3, which is the power of three play that we entered based off of up there. Now, okay, so we're looking at this and we're saying, right, we could get a reaction here. We could get some sort of a retracement here. And this retracement could simply be to come back into one of these zones. We've got multiple zones over here in this expansion leg. You can see a 30-minute zone, and you've got some zones here. This could be simply to come into the zone. This is where we said we could get a reaction off this level. We could get a reaction of this level, but there's a chance we can come all the way down, right? Because remember, the target of our PO3 has not yet been fulfilled. All right. And even though, yes, this is a range and we should break up, we should retrace, and we should carry on in terms of like the probabilities, price is allowed to do what it wants. Now, there is a reason why price does what it does, but price is allowed to do what it wants. So just bear that in mind. Now, this will save you all the mental stress from thinking, why do I keep getting this wrong? Why do I keep getting my stop loss hit? Why do I keep placing losing trades after losing trades after losing trade? It's because at the moment your mental framework is that, if you understand price action and if you do all the studying and all the learning, you will be able to predict price 100% of the time. That's impossible. That's impossible. Think about it. If you could do that, yeah, why would you need computer models? Why would you need, these algorithms? Why would you need any of that? You just have the best traders in the world locked in a room somewhere printing money. All right, but that's not the case, and they'll be well sought after, right there. All right. So, anyways, price does what it wants. So, what we're gonna see in a second is that yes, we did get that retracement. All right. But we didn't quite hit this supply zone. It didn't quite come all the way up to the supply zone. And that's not necessarily a bad thing. All right. Now we're still looking to see, okay, could we have entered a trade up there? I'm going to analyze that in a second. Could we have entered a long off of where we are now? I'm going to analyze that in a second as well. So let's get straight into that. Also, if you're looking to obviously get in touch or have a chat with myself or connect to Discord, feel free to hit the link. I think it's on Trading View. I think the link's there. Have a little scroll around, see if it is on there. If it's not there, comment on the video. Let me know it's not there. All right. So, where are we? So let's take a look at the charts. All right. So this is confusing at the moment, but it's the exact same thing, right? It's just a little bit. It's a bit messy at the moment, but it's the exact same thing. So what we're gonna do now is first of all we're gonna tidy this up. We're gonna tidy this up so that we can see what is going on here. All right. So I'm not gonna go through what we talked about yesterday, which is the facts that we are in a range. This is the start of a PO3. If you wanna get information as to that, just have a look at yesterday's video. You can see and follow all of that. So we're just going to look at what's happened. So as of yesterday, where were we? Now, as of yesterday, I think we're probably around here, right? Based on that picture we just looked at. We're probably around there. So what that means is, yes, we were expecting that retracement. Yeah, that retracement there. Going to get rid of that. Yes, we were expecting that retracement. And let's see if we had an entry. We didn't quite get to our POI. Yes, that's fine. All right, but we did cover a lot of these fair value gaps. So we almost covered all of it. All right, but let's see if we got an entry on this play. So if we play out the price action, I'm going to play at 3 speed just to give us time. So what we can see as we approach this zone is we've got a series of higher highs and higher lows. Okay, you can't really see it on the 15-minute. So why don't we take a step? Why don't we zoom in and take a look on the 5-minute? Okay, so on a 5-minute, we can see it clearer, but on a 3-minute, I think it's clearest. So what we're going to look at now is we're just going to draw our market structure on the way up. We've got series of higher highs and higher lows. all the way up. This is how the market moves in an uptrend. Okay. So at the moment, this is the level to go. If we lose this level, this is the last high low. If we lose this level, this is where we're going to get that break in structure from, right? Okay. Ideally, I would have wanted it to come slightly higher so I can have reassurance in that continuation play and taking that all the way down. But like I said, price does what it wants. So what did price do shortly after? Well, price carried on rallying up and then bang, price gave us that break. So we have officially broken structure here. This is an official break of structure. Now you could say that break happened a little bit higher up. Well, let's see. Well, on a 5 minute, you know, there are ways you can look at this. There are different ways you can look at this. Whether you're looking at it as, you want to see a bar close, which is probably what I would recommend. Based on this, on the 5 minute, this is not a break. On the 10 minute, I guess on a 10 minute, it's not a break. And on the 12 minute, it's not even market structure. What about the 3 minute? On the 3 minute, that level is up here. So yes, on a 3 minute, it is a break. Okay, not a convincing break, but still a break. Okay, if that's a break on the 3 minute, what does that then mean? That means we're playing this on the 3 minute. That means this is the break. All right, the break in structure taking place here. Retracement coming up here, and look how beautiful. Oh my goodness, this gets me so excited. Look how nice that retracement was. That not only did it retrace, really, really nicely with its three bull bars, it gave us and it retraced at a nice zone. It retraced and reacted off of a very, very nice supply zone. So I'm just going to show you that there and call that a supply zone. Look at that. That was a nice 3 minute supply zone. Okay, so if you were looking to enter that trade, that was your entry right there. That was your entry right there. Let's see, if you were looking, let's say you're a fib trader and you're looking to enter this trade based off your Fibonacci pull. You take a pull from the high, you take it down to the low, and it doesn't look like we got up to the golden pocket, but I'm sure you would have at least, yeah, so the golden pocket was a little bit higher up, but let's say you were entering at the 50% mark, that would be at least at the 50% mark. All right. So that's it. So where would we have entered that trade? Let's take our short setup. We would have entered a trade there. We would have put our stop loss up there. All right. And we look to ride that trade down. So let's see how that would have done. So if we played that now, let's change that to 10 because we want to see this quickly bang. Okay, so not bad. Now we did get a bit of a retracement here, which was an interesting one because we actually flipped market structure here as we came down. So as we came down lower, we flipped market structure locally, and then we had a proper flush down. We had the real flush down. All right. So if we would have still been in that trade, of course, and then bang, we had that flush down. All right. So if you were entering that trade, that would have been a nice 8x. All right, 8x. So what does that mean? That means if you risked $1 here, you would have made $8 if you only took profit once. If you risked $10, you would have made $80. If you risked $100, you'd have made $800. If you risked $1,000, you'd have made $8,000. All right, not a bad day in the office. Not a bad day in the office at all. Just by simply understanding the charts, understanding how it moves, and understanding where to enter your trade, where to place your stop loss, where to look for your trades. All right. So yeah, we didn't quite come up here. Now, what I did say earlier, I said, the fact that we didn't come all the way up here might not be a bad thing. All right. It might not be a bad thing. Is that for the Bulls or for the Bears? I'll give you a second to think about that. So it might not be a bad thing for the Bulls. Why? Because as far as a version of market structure goes is you've got a low, you've got a high, you've got a low, you've got a high. Yeah. Okay. So we broke structure there. Looking for some sort of retracement to carry on up. Okay. That's one scenario of market structure. What we're going to do is we're going to make that green. Okay. And we're going to make that 3 thickness. That's one version of market structure. Now, the second version of market structure, perhaps, is the fact that, hey, look, we've got this downward trend, a low, high, low, high, low, high, all right? A bit of internal structure here, okay? This simply just being that retracement leg, okay, to create a low. Now, in the case that we came all the way here, mitigated. Yeah, sorry, just had to pause that quickly. Now, okay, what's the second version of market structure? We're only got about 5 minutes. So in the case that we came all the way back up here, yeah, mitigated this last supply, that will tell me actually, do you know what? It's more likely we come for this low, all right, continuing and bearishly and coming down here. Okay, so in green, we've got what was favorable for the bulls, and in red, we've got what was favorable for the bears. Okay. So this is why I say it may not be a bad thing that we've actually tagged there for the bulls. All right. So that's what we've got at the moment as far as what's happened or what's transpired in the last 24 hours. Now, we've obviously flushed down, and we flushed down quite nicely. And we're looking at this range now to see, all right, well, could we enter a trade? Well, did we get a reaction off this zone? No, we did not. We get rid of it. Did we get a reaction of this zone? No, we did not. We get rid of it. Okay. Did we get a reaction of this zone? Well, we didn't. We didn't close. No, we get rid of that. I don't like that. I can't. We can't call this a reaction, so we get rid of that too. Okay. So here we are. All right. Now we're going to look at the price to see well what's happened next. Guess what price has done? Price has done what Price loves to do. Price has created another range. All right. So we've got lots of ranges that we're playing with. And I'm just going to show you quickly some of these ranges. This is why it's so key to understand how ranges work. Look, we've got a range play here. We had a range play here. We had a range play here, a range play here, range play here. We had easiest range play here. Okay. Okay, to get into this trade was a range play. All right, this external range play. Now look what's happening again inside that range. Another range. All right. So it's so important to understand how these price and these markets moves. And price ranges way more than it trends. All right. So here we have this range that we are in right now. So how am I going to look at this? Well, first of all, I'm going to understand that perhaps we're still just creating, you know, uh, perhaps we're still just creating a low before that high for that retracement. All right. So I'm going to look at this range and I'm going to say, well, we've had our first tap of this range down here. Yeah. We've got a first tap. We've had a second tap. Okay. Now, we kind of did come down. We rallied down here. I would have liked to see perhaps a third tap. The third tap that was trading lower than the second tap with some bullish divergences. That would have got me into a trade. But based on what we got now, I wouldn't have entered a trade. Unless perhaps if this level here, if this impulse here had rallied higher, breaking market structure out of this range and rallying higher than this lower high, then we got something like this and this little retracement. That would have been great to see. Why? Because that would have meant, yes, we've broken market structure, simply retracing to carry on. All right. So because we didn't get that, I'm not in this trade at the moment. I didn't touch this. And I'm sure on some level and some confirmation, someone got a nice play on that. And that's completely fine. There is another range strategy that um, I do use from time to time, but no, I think I'll keep it simple. I'll keep it simple. That would have allowed you to catch that one, but I'll keep it simple. But anyway, so what we have here is we have a range. So we're going to expect to trade at this range low. It could be that this price comes down here. So as price comes down here, let's say it looks like this. It comes and it SFPs that prior level and also wicks and takes the juice out of this zone, all right, before it moves up. That would be excellent with obviously market structure change. So that's trade number one. Now, trade number two, I need to watch to see what price does at this high. Why? Because this is my last lower high. So I'm going to look to put a potential short setup there to see what price does at that level. If price wicks that level and then carries on down, that's great. I'm going to be looking for a short there. A nice little simple 5x short, just from range high to range low. Very simple. And vice versa here. Simple short from range low to range high. All right, so very simple play. Those are two trades I'm looking out for today, and I'm patiently waiting. Okay, So now in the case we do break out from this range, all right, well, it's the same thing applies. You break out from this range here, up here, well, you're going to look for that retracement to carry on further up. Now you could get nice market structure coming like this. So if you miss that first flip, that's fine. You can get in on a second flip, get in on a third flip. Just be careful though, because as the higher and higher you go, the closer and closer you get to this supply zone. Now this supply zone is a potential reaction point for Bitcoin. All right, so that's how I'm going to be playing that one for the bulls. Now for the bears, if you break down bearishly, that's not necessarily a bad thing. And that's not the end of this idea. Why? Because really and truly, remember, price started from all the way down here, this leg. So price is really allowed to retrace all the way down here. It can even SFP this level again if it wishes. All right, before it carries on. Okay, so this idea is still intact. We just have to be patient because we have reaction point over here potentially. Okay, and we also have the SFP of this level potentially for a nice 3-tap model where you've got. Oh, actually, see that looks really interesting. Actually, I didn't see that before. But what looks to be happening here as well is a Trinity Model 2 play. A Trinity Model 2 play based off of Wyckoff, where you've got tap number 1, tap number 2, which does break out of your range, yeah, and tap. Oh, I did not see that. Well, there you go. And what you've got here now is potentially your retracement before you go further up. Okay, so that's kind of making me think we're going up here for this range, but we're gonna wait and see. And if we do go up, that's fine. Catch the retracement, and follow that up. So that's what I'm looking out for at the moment as far as this range goes. Obviously, the ideas look the same as yesterday because not much has happened apart from this flush down. Okay, so the ideas look very similar to yesterday. We're looking out for the low of this zone for a trade. We're also looking out in the bear case. So in the bear case, we're going to look out for the low of this zone for a trade. All right. And what else are we looking out for? Well, same as yesterday, we're looking for this zone for a reaction. And above us, if we do break out of this range, well, I'm going to be looking here for a reaction point up here, this zone up here, as well as up there. All right. But when that happens, we're going to talk about it. But I'm just going to put a quick POI here, just for those of you who want to investigate this further and be fully prepared for this weekend. All right. So that's what we've got over here. And I think on the short term, on a very simple, stance, that's kind of what I'm looking out for. Reaction here, reaction here, reaction here. And the trades yesterday stay the same. All right. So if you found this useful, hit that follow button, hit me up on YouTube, and I will see you tomorrow.